Hi, I'm Carisha Devlin, co-CEO of Annie's Project. Welcome to the InPlain Talk podcast. In the next few episodes, we'll be exploring and digging deep into the topic of crop insurance. These episodes are sponsored by USDA RMA Award number RMA 23CP T0013617. Our first episode in this series is Why Do I Need Crop Insurance? We have a phenomenal guest to help us kick off the crop insurance series of episodes. Heather Dufault is an extension educator in ag production systems with University of Minnesota Extension. Heather farms with her husband and also was a crop insurance agent in the past. She has a wealth of knowledge and life experiences to share with us. So Heather, before we kick off, can you tell us more about yourself and your background?
Oh, I'd love to. It's always fun to, it's daunting to talk about yourself, but then it's always fun to talk about yourself. So, I grew up on a dairy farm, so I'm very interested in livestock and always have been as a kid. So I ended up going to school for dairy science at the U of M. Ended up graduating with an associate's degree in dairy science, and then stayed and took my bachelor's degree in ag business management. So after that, I ended up working in an agency with crop insurance. And then he sold his agency to another agency. And so I ended up working there for a little over 20 years total between the two places, just dealing with crop insurance. So that's part of my background. But then, as you said, I also farm with my husband. So yes, we have a small, what I call small, generational family farm. We have about 1,000 acres that we plant wheat, soybeans, sugar beets, and corn. And so we also have 3 kids who want to help out on the farm as well. Our oldest son is farming with us now, so he's making that the 7th generation of our family farm. So not only do I have the crop insurance background a little bit, using that whole background as well on our farm, trying to make our farm decisions, it comes in handy sometimes.
I'm sure it does. So for those that have no idea about crop insurance, perhaps they're new to farming, perhaps they married a farmer, and this is just a whole new topic for them. We're just going to start really basic. So can you explain what is crop insurance?
Yeah, that can be a very detailed definition, but I'll try my best. Multi-peril crop insurance is an insurance that came about in the 1980s. It came about, and it is a tool that can help us as farmers and producers reduce some of our risk on the farm. So hopefully that helps, but it's an insurance tool, just like our house insurance is a tool for our homeowners policies or auto insurance policies for our cars.
So our listeners can think of it like other types of insurance. They could compare it to that.
Exactly. They can compare it to, the need, we wouldn't live in our house without our homeowners insurance in case of a fire. So farmers probably shouldn't produce a crop or not carry insurance on it. So this is their type of insurance.
So following up on that, I think everybody listening knows how auto insurance works or even how your home insurance works. But if you're farming and you have crop insurance, what does it do for you?
So insurance in general is going to give us a compensation for a specific loss in return for a payment of premium. Okay, so the crop insurance is going to cover us to a certain amount of production, predetermined based on some history and some other factors, and then also due to a weather-related event, because the title of the insurance is multi-peril crop insurance, and so it's protecting the producers from the weather events that are happening out on the farm. So, and hopefully providing that safety net for the farmers to be able to come back next year and farm again.
Who administers crop insurance?
Crop insurance is a government policy, actually. And so the USDA and the Risk Management Agency manage the policies themselves. And so when we as producers go to buy crop insurance, we're buying our insurance from an approved insurance provider, and that provider works with the USDA and RMA to make sure that the policies are all working the same direction.
Can you give us a few more examples of how it does work?
If I had a wheat, let's say a wheat crop, we grow wheat up in Northwest Minnesota. If I would plant 50 acres of wheat, but a hard rain event would take out, that whole 50 acres. There's a predetermined guarantee or deductible, if you would call it that, like you would hear on other insurance policies. If what I harvest doesn't meet that deductible, then I would end up having a claim on my policy. Hopefully, we don't have to go through those weather events, but sometimes Mother Nature has other ideas in store for us, right?
What are some other positives? Like that example you gave us right there, that is definitely a positive. Are there other positive things you can think about utilizing crop insurance?
Yeah, because when you put a crop insurance policy in place, it helps you figure out your break-even prices or your cost of production. So then you can use that crop insurance policy to help you market your products. And so if you're looking at a grain market, you want to set a grain contract, you can look at how much your deductible or your guarantee is for your crop insurance policy, and then you can market your grain appropriately, to meet that, so that you can hopefully have a positive return on your um, on your profit margin for your crop when you're finishing up your records for the year.
So, thinking about on the opposite side, are there any negatives about crop insurance?
Negatives, it depends on who you talk to if there's negatives or not. You do have to work with the Farm Service Agency on your crop insurance policy. As we said, it's a government policy, so it is a subsidized policy. So in order to receive those subsidies, you do have to work with the Farm Service Agency and make sure that you're a farmer in good standing, basically. Some farmers may not like to do that. Some don't have a problem with it. Most don't have problems with it. Sometimes you can overinsure yourself, so that could become a negative. But hopefully we're not. And sometimes you can outproduce your coverage, or your guarantee. And so while some might look at that as a negative, I kind of look at outproducing your guarantee or your deductible as a positive, because then you're using that history to build a better crop insurance policy for the next year. So yes, there are some negatives, but I think they're minor compared to the positives that we can have.
So, we've talked about crop insurance, and some of our examples were like some of the row crops, but crop insurance really is all encompassing. So there's a lot of other products that fall under it that maybe the terminology crop is a little deceiving. So could you just maybe list some of the other topics that are covered?
Oh, absolutely. Because yes, you have your standard row crops like your corn, soybeans, wheat, the top, producing crops. But you also have coverage for a whole farm. You have your vineyards, you have your apple orchards, your fruit orchards. There's onions and garlic, and there's different crops covered on in each state, depending on that ability in that state. Believe it or not, livestock actually falls under crop insurance as well. So even though it says it's a multi-peril crop insurance policy, we still have coverage for livestock as well, with livestock risk protection and livestock gross margin. So there, if you're a small garden producer, if you're producing enough product to sell for farmers markets or CSA, something like that, maybe there's a policy out there for you called whole farm coverage or micro farm coverage. So as we dive into this project a little, Krisha will probably see some of those examples as we move forward.
Thanks for listing those for our listeners, because I think the term crop can be deceiving for folks, and they automatically think, oh, well, that doesn't apply to me. But as you shared, there's so many things that do fall underneath that umbrella, and it's worth for folks putting some time in and checking it out.
We even have coverage for bees for apiculture, so we can't forget
Mhm.
about our little bees
That's
and honey
right.
producers either. So
That's right. So when should you purchase it? So if I have listened to this podcast episode and I'm surprised, I think, oh, well, I have bees, and or I have, a small urban garden or whatever I produce. When should I think about purchasing it?
you know, I think that is a multifaceted answer, Krisha, because there are multiple different dates depending on what product that your operation fits into. There are some standard sales, we call them sales closing dates, if you will. In the spring crops, March 15th is a very popular date, so that is coming up. So we do have farmers out there right now that are really looking at their policies and trying to figure out what they want to cover. If you're a forage producer, you might have a fall sales closing date. A livestock policy, for example, has a daily closing. There's a daily policy closing time frame for that. So it's really just trying to figure out what you want covered, what state you're in, and then finding out what that date is for you that works for your operation.
So I think you've done a great job kind of highlighting some of the different reasons why you need crop insurance, as well as the different types of crop insurance. Do you have any final thoughts for us?
Don't be scared. Don't be scared to ask the questions or and do your research. Don't let the word multi-peril crop insurance intimidate you. It's a big phrase, but it can have lots of positive effects for a policy.
Well, thank you, Heather, for this introduction into crop insurance. We'll be continuing the conversation with Heather in the next episode, so be sure to join us for part 2, where we'll be talking about how to choose an agent.